Hello, I'm Haider Malik, and welcome to the Mehmi Financial Group podcast. Today's topic is Saskatchewan Fleet Expansion Financing, Fueling Prairie Trucking Growth. In this episode, we'll explore how prairie carriers can secure capital through loans, leases, sale leasebacks, and provincial programs to grow their fleets without freezing cash flow. Let's start with your expansion goals. Define the number and type of units you need: day cabs for regional grain runs, reefers for perishables, bulky flatbeds for oilfield equipment, and estimate total capex. A fully equipped sleeper tractor can cost 180K, 220K. Multiply by your target count to size your funding requirement. Next, review your core financing vehicles. Equipment term loans. 5 to 7 year amortizing loans at prime plus 0.75. 1.25% let you own outright, claim full capital cost allowance and interest deductions, and run trucks for 8 to 10 years. Expect a 10-20% down payment. Local lenders like Connexus, ATB Financial, or national banks can offer relationship-driven spreads. Operating leases. 36 to 60-month rentals treated as OPX and often off-balance sheet under ASP IFRS. Payments are fully deductible and frequently bundle preventive maintenance, telematics, and roadside assistance. Ideal for teams that refresh equipment every 3-5 years to stay on the latest EPA standards. Finance leases. 60 to 84-month capital leases with nominal residual buyouts. You book both asset and liability, still capture CCA and interest deductions, but spread cost with little upfront cash. Best for core tractors you plan to use beyond midlife. Sale leaseback. Monetize paid-off tractors, reefers, or service rigs by selling them at 75-85% of FMV to a lessor, then lease them back under predictable rentals. You free capital immediately for new down payments or working capital with no operational interruption. In Saskatchewan, don't overlook provincial programs. Agri-invest and crop insurance loans from the SCIC can bridge seasonal cash gaps. Saskatchewan Transportation Company. Transition grants occasionally support rural carriers upgrading equipment. Canada Small Business Financing Program shares lender risk on up to $1 million of equipment loans, often reducing spreads by 0.5%. Negotiation levers to maximize value. 1. Deferred payments. Align first payment 60 to 120 days after delivery to match grain sales or contract draws. 2. Money factor and rate. Target an effective APR near prime plus 1% on leases and prime plus 0.75% on loans. 3. Residual guarantees. Lock in 50-60% at 60 months to lower rentals and boost trade-in equity. 4. Bundled services. Bundle PM, wear item plans and telematics into your lease to cap downtime and invoice complexity. 5. Volume and loyalty credits. Order multiple units or return to the same dealer's captive arm to unlock loyalty rebates and fleet discounts. Operational best practices. Conduct pre-delivery inspections on used units to verify condition and avoid hidden repairs. Maintain detailed telematics and maintenance records to bolster your negotiation. Standardize specs, engine packages, axle ratios, sleeper configurations to simplify parts stocking and resale. Here are 3 action steps to launch your prairie expansion. 1. Finalize specs and volumes. Compile a detailed list of model types, horsepower, bodies, and annual kilometers. 2. Solicit competitive quotes. Gather term loan, operating lease, and sale leaseback proposals from 2 banks, your OEM captive and an independent lessor. Compare all-in rates, fees, and service bundles. 3. Build a 60-month cash flow model. Compare net present costs across loans, leases, and sale leasebacks. Include deferred payments, tax shields, maintenance savings, and residual equity to choose the optimal mix. By aligning your financing strategy with Saskatchewan's seasonal cycles, provincial programs, and disciplined negotiation, you'll expand your prairie fleet efficiently, preserve working capital for operations, and keep your trucks moving across the heartland. I'm Haider Malik. Thanks for listening to the Mehmi Financial Group podcast. Drive safe and finance smart.